Now, the year 2023 presents some economic risks and uncertainties for the United States. Comparisons between the current economic situation and that of 2008, before the economic crisis and financial crisis, they have been made, causing concern about the potential for another major economic collapse. However, there are differences between the two situations, and it's important to understand these differences and the factors contributing to the risks and uncertainties facing the economy right now in 2023. Now, one potential risk is the failure of Silicon Valley Bank, which is comparable to the failure of Bear Stearns back in 2008. Now, if Silicon Valley Bank were to fail, it could have significant ramifications for the economy. Now, the stock market, unemployment rates, and the housing market could all be impacted, similar to what happened after the Bear Stearns collapse. Now, however, the government bailout of Silicon Valley Bank has led some to believe that the crisis has been averted. Now, this belief is misguided, and it is important to note that a banking crisis, even if it causes mortgage rates to drop, is not good for the economy or the housing market. Therefore, it is important for potential home buyers to be cautious and not get caught up in all the hype surrounding the current situation. Now, another potential risk is the inflationary pressures facing the economy. Now, the Federal Reserve's recent actions, such as the bailout of Silicon Valley Bank and the subsequent $300 billion of printing of money, have increased concerns about inflation. Now, the inconsistency in the Federal Reserve's messaging regarding inflation is also contributing to this uncertainty. While the loaning of money to the FDIC and commercial banks may not be inflationary in the short term, the potential for inflation to continue to rise is a real concern. Now, if inflation continues to increase, it could result in more real estate investors buying up properties, pushing prices up, and making it more difficult for potential home buyers to enter into this market. It is also important to note that the risks and uncertainties facing the economy are not limited to these factors. There are other potential risks such as geopolitical tensions, natural disasters, and unexpected technological advancements that could impact the economy as well. However, the key to navigating these risks and uncertainties is to understand the factors contributing to them and to be prepared for any potential changes there may be in the economy. Now, one of the factors contributing to the potential risks and uncertainties facing the economy is the rise in real estate investor activity. Now, while the average home buyer is not yet actively participating in the housing market, real estate investors are seeing a significant uptick in activity. This increase in investor activity follows a drop in investor home buying at the end of 2020, but many investors are still sitting on big pockets of cash and are purchasing properties despite the current interest rates and mortgage rates. This stubbornness in real estate investors is a potential risk, as it could contribute to an increase in housing prices, making it more difficult for those potential home buyers to enter into this market. Now, furthermore, there is a lack of clarity and consistency in the messaging from the Federal Reserve regarding this inflation. Like I said before, the recent $300 billion printing of money, along with the loaning of the money to the Federal Reserve, from the Federal Reserve to FDIC and commercial banks, has increased concerns about inflation. While some argue that money printing is not inflationary, the potential for inflation to continue is a real risk and concern. And this inconsistency in messaging from the Federal Reserve is contributing to this uncertainty. And it's important for the Federal Reserve to provide clear and concise messaging on March 22nd when they come and meet again. In addition to all these factors, these geopolitical tensions, like I talked about, or natural disasters, could also have significant impacts on the economy. For example, tensions between the United States and other countries like China or Russia, they could cause an economic downturn. Now, similarly, natural disasters such as hurricanes or earthquakes could damage infrastructure and disrupt supply chains. This could lead to more economic stability. Now, overall, we're going to have to wait and see over the next couple of weeks to get a better grasp on what's going on and what's going to happen over the next couple of years. All right. So thanks so much for stopping by today. My name is Rock Daniels. I am the Bluegrass Realtor. Please stay connected. Please subscribe. Have a wonderful day.